The Nedgroup Investments Excess Guarded Fund of Funds Q3 Commentary. The Guarded Fund of Funds returned a positive 0.9% for Q3 2019. Year to date, the fund is up 6.9%, and over the last 1 year, the fund is up 4.1%. Let us see what contributed and detracted to performance. The main contributors this quarter was, firstly, foreign exposure at close to the regulated maximum of 30% made a meaningful contribution as the rand weakened 8% to the US dollar and global equity markets outperformed the domestic market. Veritas, manager of the Nedgroup Investments Global Equity Fund's stock selection, has added significant value year to date, with some of its largest stocks, Charter Communication up 45%, Comcast up 34%, and Microsoft up 38%, posting strong US dollar returns. The foreign exposure, high cash allocations, and short duration position of the Nedgroup Investments Flexible Income Fund also contributed. Detractors this quarter were some of the banking stocks. Standard Bank down 9% and First Rand down 7%, performed in line with the financials sector, which was down 7%, as the market continues to price in a challenging environment for South African-focused stocks. Diversified Miners BHP Billiton down 7% and Anglo American down 8% were hurt by a sharp decline in the iron ore price. Sasol had a further terrible quarter, down negative 28%, delayed the release of financial results on the 16th of August and the 16th of September, citing the need for more time to conclude the investigation into the budget overruns and delays of the Lake Charles chemical project. Domestic property stocks accelerated, down 40%, Depula down 40%, and Delta down 70%, were punished by the market for poor financial results. In terms of the current asset allocation within the portfolio, it currently has a 24.8% exposure to domestic equities, 4.7% exposure to domestic property, and 47.7% exposure to domestic fixed interest. The fund has 14.6% in foreign equity, 2.9% in foreign property, and 5.4% in foreign fixed interest, giving the fund a total of 26.6% directly offshore and a further 10% in rand hedges. This thus gives the portfolio about 37% exposure to offshore markets. Naspers at 1.7%, British American Tobacco at 1.2%, and BHP Billiton at 1.1% make up the three largest stock holdings within the equity portfolio. Looking at changes to asset allocation or fund manager selection over the quarter, Q3 saw the introduction of a new domestic equity manager, Laurium Capital. Laurium is an independently owned investment manager with 26 billion rand assets under management, managing several hedge and long-only funds in South Africa and the rest of Africa. The company was formed in 2008 and is based in Johannesburg and Cape Town. The foreign equity overweight was reduced to neutral, and the local fixed interest short duration portion increased to overweight. A healthy allocation to defensive assets remain, whilst our neutral position to domestic bonds and domestic property is largely retained. The funds are well diversified across all asset classes with a moderate risk positioning.